Okay, folks, welcome back. This is the Wednesday review from the Yahtzee Mentorship. Week ending March 8th, 2019. And in focus this week for this video is the dollar CAD. Alright, we started off the week with the analysis video on the economic calendar shown here. And I tested you all because I gave you an insight about the dollar CAD in the last video for this week's analysis. I showed you a chart indicating where I believe that the dollar CAD would reach for relative to the daily chart. And I did not include the Canadian dollar economic news for this week. Now I can't see by raising of your hands. If we were in a classroom setting, I would be asking you which of you checked the economic calendar filtering for Canadian dollar news. Had you done that, this is what you would have saw. Right away, this should be jumping off at the list of things to be looking for Wednesday's trading. 10 a.m. Canadian dollar, Bank of Canada rate statement and overnight rate. And it had a medium impact IBPMI. And then at 10:30 we had crude oil inventories. I threw you guys off today on Twitter. I had one of the members asking what was going on with Canadian dollar, but I didn't want to speak because during tests the teacher doesn't talk. So I said we're holding out for crude oil inventories, which is partly true because you would have seen that relative to the economic calendar we showed on our weekly commentary. So if I ever throw you a curveball with other currencies, and sometimes it'll be Australian dollar and sometimes it'll be Canadian dollar when I want to be a deviant. You always have to check the economic calendar because these are the big explosive moves that catches retail off guard. They don't expect this, they don't look for it, they don't care about an economic calendar, they're worried about their indicators. Okay, so very, very valuable lesson this week. Moving on over to the dollar index, briefly, this is the daily chart. You can see that we are moving up handsomely. We were looking for this going into this week. Obviously, the protocol, again, is for non-farm payroll weeks. We expect the best or purest form of analysis and price delivery to occur between Monday, London Open, and Wednesday's New York Open setups. So whatever forms in Wednesday's New York Open, once that comes to fruition, you're pretty much on the sidelines the rest of the week. Typically Thursday and Friday. Thursday can be lackluster or sloppy. And then Friday is obviously the carnival ride known as NFP, or not for professionals as we refer to it. But on the economic calendar, it's the non-farm payroll numbers release. It can be volatile sometimes, most of the time in recent months. It's been rather lethargic and lackluster in its delivery for volatility. But nonetheless, we don't care because we're not really trading it. It's useful to look at once in a while. It's good to study it, looking for liquidity runs and seeking liquidity on those high-impact news events. But we look for the setups Monday, Tuesday, and up to Wednesday's New York Open. Moving on over to the dollar index hourly chart, you can start seeing the order blocks that were in play here, and we're in consolidation. Notice that we also traded above this short-term high and essentially back into the mid-range of this consolidation, and we left equal highs. So to me, this is suspect. I think we may punch through that. The problem is it may be just a shallow run through. At this point, it doesn't make a difference because our protocols for this particular week, and it's every week that has non-farm payroll. Okay, so you check your economic calendar, the Friday that has non-farm payroll in it, the Monday leading up to it, the Tuesday leading up to it, and the Wednesday leading up to it. Those are the days for focus for professional analysis. Anything past that, Thursday and Friday, it's chaff. Don't pay any attention to it. Just let it go. There may be sometimes very explosive, very clean, pure price action on those days. But guess what? Not all the time. There's more often than not very sloppy price action on Thursday and Fridays of the weeks that give non-farm payroll numbers on Friday. Moving on over to our dollar index 15-minute chart, you can start seeing a little bit more clarity with the price delivery and how the order blocks worked in stunning fashion. And we have, again, very clear depiction of the equal highs. So we'll be watching this. On the downside, we have these equal lows here, so that's something to watch as well. We did trade below this low here. This doesn't look too convincing for the upside, so we'll have to watch and see. Again, this is the reason why it's important to have specific protocols in place relative to market profiling and the economic calendar or market structure, because all these things are going to be influential in the terms of whether you're going to be consistently profitable or if you're going to hold on to your gains you make at the beginning of the week. Since you know you have that landmine waiting for you on Friday, and if you've made money or you've made pips, if you will, in your demo account while studying, you don't want to give that back on a crapshoot. Okay, you don't want to go to the casino. You don't want to do all those silly things that retail will do. You leave it alone. So you take your low-hanging fruit for the week and you leave it alone. In an ideal situation, really, you shouldn't even be watching Twitter on Thursday. You shouldn't be watching Twitter on Friday. You shouldn't be watching the charts on either one of those days. Have a long weekend. This is how you build consistency, and also helps balance the mental fatigue that will set in if you're always trying to pursue something. All right, so this is the daily chart for the dollar CAD, and this is a beautiful delivery of price so far for the week. We were expecting upside potential on this pair, but we are looking for a potential setup if we were to retrace down to a specific price level. We'll look at that when we drop into the hourly chart here. All right, so here I mentioned if we trade down, okay, obviously I didn't know where we were going to open up at, but we gapped down, and I gave you something on Twitter that precedes all of this run here. And I'll leave a link in the post for this video in the forum, but use that link, go back to Twitter, and follow the storyline I gave you there, because I outlined all of this before it happened. If we look at how we were expecting price to maybe trade down here, that is a setup, okay? Plan A is we're looking to buy dollar CAD. That's the plan. We want to buy it. Now, it doesn't mean that you have to only buy it down here. Okay, we didn't have a short idea. We didn't have an idea where we wanted to sell it up here and cover here. We didn't mention anything like that. The premise was we were looking for dollar CAD to go higher relative to a chart I'll show you later in this video. And you'll know it by looking at last week's video going into this week's analysis. If we see a gap down in price, this is pretty much summarizing what I gave on Twitter. If we see a gap down, generally you want to see it trade back up to it, fill it like it does here, and then go lower. If it does not do that and it goes above it, that is very telling in price action. And I'll talk more about it when we get into a lower time frame. But I noticed how price was most likely going to whip below Friday's high. I was giving you intraday liquidity markers for Monday's trading on dollar CAD. I was teaching you how to look at, it's kind of like tape reading. Okay, I was telling you what to watch for, where the market should reach for next for the intraday swings. You were already told that dollar CAD was going to go higher, that we weren't looking for lower dollar CAD, we weren't looking for shorts. There's no plan B, okay? There's no plan B. Plan A is dollar CAD going higher. That's all I said. There was no mention of shorting. There was no mention of looking for a short, okay? The only thing I said was this would be interesting if we get down to this level because we have a breaker here and it's also the order block. Okay, so if we get down to there, it could have happened on Monday, it could have happened on Tuesday, but if it would have gone there, this would have been a very easy setup to be going long on. It's not limited to that, and because I don't know how the market's going to open, I have to wait and see what we do on Sunday. When we open, if we gap, I study that gap. All right, so take a look at this price action here. You can see, again, bullish order blocks. And here, these consecutive down close candles. Right in here, these are all down close candles, making up a full order block. Price trades down to it here, hits it, runs away. We have an order block here, this candle. Price trades to it here, rallies away. And again, the consecutive down close candles in here. Price hits it and then builds the framework for the upside movement today on $CAD. Taking a closer look with that 15-minute time frame, here's the gap on Sunday. Right in here, this gap. Typical price action is if we see price run up, close the gap, we expect it to sell off. If we gap down, now this is very important, okay? If you're not writing this down, you are missing one of the strongest things that you can learn from this week's price action. Gap down in an underlying bullish market, if that gap is surpassed, in other words, if we have a gap here, here's Friday's close, we opened up down here on Sunday, price comes all the way back up, closes the gap, right here, closes it. This is normal. We expect to see it to trade off like that and go lower. If it ever comes back up and trades to the other side of the gap, that is bullish, extremely bullish. Now, forget the fact that that occurred. We were already bullish $CAD. Plan A. We want to be buying $CAD. Why? Because the dollar index was bullish. I mentioned this. It was in the details of all the video. There's no plan B. Okay? There's no plan B. So what we're looking for is indications that this thing wants to go higher. This is one of the strongest indications. When this gap gets filled on a gap down on Sunday's opening, we close the gap and then trade lower, but then trade back above the gap. In other words, treat the gap as like a support and resistance idea. If that gap is broken through, it's going to act as support now, or it's going to be a barrier. To me, I see it as an indicator that there was the public puking their guts up. They wanted to sell it. That's what this is doing. The public or retail traders, they chased it going lower. That's all this is, okay? So our focus goes right back to Friday's high. Go back on the Twitter. Use the link I put on the post below the video's link in the forum. We see the run here, and I said, no, where's it going to go next? Retail is going to want to use Friday's high as support, and anyone that went long, where's their liquidity going to be? Below Friday's high. There's the liquidity, okay? It's not a breakdown for an epic failure, Mike. This is a run for liquidity below Friday's high. What's the underlying premise of what we said was going to happen in $CAD? It's going to go higher. We did not look for shorts. We did not outline a short sell. Okay, that was no plan B. None of that was there. What we're looking for is reasons to go long. I'm showing them to you. Okay, the wick below Friday's high for liquidity. They run through it and then they rally through. This is not an epic fail. Okay, this is all part of the narrative. Then we go back to what? Friday's high. Trade back down into what? Bullish order block. Here it is. Down close candles. Now, here is a $1 million notation for your study journal. If you do not record this, you're foolish. You're letting this monthly expense of $150 be a waste of your time and money. Notice how price works the previous day's highs. Very important, okay? You all want to know what order blocks to use? Well, pull up a chair. Here you go. Here's Friday's high. This is Monday's trading. I drew your attention to Friday's high. They would run the liquidity initially, and then we surged through it. Price came back late in the day. Yes, it's not a kill zone, but it's New York close. Okay, so New York close. There it is. Wait a minute, Michael. You didn't talk about New York close. Right. You're in a mentorship now. This is not free tutorial stuff. We're going beyond that. The trending environment that we were expecting for $CAD, moving up to the daily chart levels, I'm going to show you again the chart. You want to be looking for periods of where price and time will meet, and we expect to see an expansion on the upside. Here's New York close. Price rallies away. breaks through this day, Monday's high here. Draw Monday's high out on your own chart. I did not put it here because I want you to do this part for you. You have this in your study journal. Everyone's going to have their own notations. I'm giving you the salient points. Monday's high here. What are we, bullish or bearish, dollar CAD? Bullish. We've already said this. Plan A. Monday's high. Price trades back just to Monday's high? No. It goes below it a little bit. Right in here. Run liquidity. Rally away. Okay, anyone that long here? Where's their stop? Right below here. Drop down one more time. What's it reaching for? The liquidity below Monday's high. Why is that important? Why is it seeking liquidity below the previous day's high? Because that's where a majority of the interbank play is relative to a daily chart. That's why I said 90% of the things you're looking for trade setups are going to be found in your daily chart. Previous day's highs and lows. If you have a bullish bias, previous day's highs and lows, that's where your order blocks are going to form. Are you trying to tell me that I can look for bullish order blocks when I'm bullish and have an underlying bullish bias to a pair? And all I got to do is draw a line from the previous day's high, draw it out in time, and then wait for a bullish order block to form and then trade that? I don't know. You study it and you tell me. Here's Tuesday's high. Same premise. Here we go. Tuesday's high. We trade away from it. Do we chase it? No. No, we don't. What do we wait for? Price come back down to the high? That's what retail is going to think. That's support. Okay, great. They trade through here. Maybe they'll get that one right. But what we're looking for specifically is the down close candle right in here at or just below the previous day's high. Bullish order block. Boom. And it's also overlapping with this. All these down close candles, that's a bullish order block. This is all one consecutive order block. Price hits it here, rallies through. We have a session high here. Price comes down just below it again, rallies away, and right inside this box, right here, this is where the magic happens. Okay, this is the crowning jewel of this week. Inside that box, this is that 15-minute bullish order block, right at a session high. What session is that? London. This is London session high. Here's the run right back into it again, and then we rally away. Do we chase it? No. This whole square in here is New York Open. Inside this little square is New York Open. Price trades down into the 15-minute order block right there. Remember this candle because we're going to talk about it again when we're dropping into the 5-minute chart. Price drops down into it here, consolidates, and then explodes to the upside. Most of retail were completely blown away by this. Go on the forums and look at it. Go over to Forex Factory. There's people in there saying, "Oh, I put a short on. I'm holding it for a breakdown. It's going to go lower." Look at all of the social media relative to dollar CAD. The majority of it, they were looking for shorts. So let's take a closer look inside this block. Inside this little square, okay, we have these 3 down close candles. That's that 15-minute order block. But look at the very last candle. This is how we can fine tune it. All the way down into half of the actual order block is the midpoint of the candle to the high or the body. When it's such a short little stubby little wick like that, I'll use the wick. Did you hear that, Anita? There is a low right here, forming right at the top half of that down close candle. There's your order block. I watched the price on the 5-minute chart right in here rally away. I knew, looking at these highs here, these are too clean. I knew they wanted to go higher with it, and I knew they wanted to run it ahead of the bank rate release. That occurred right there. And again, that's the rate release for dollar CAD, Canadian Bank, or Bank of Canada rather, at 10 o'clock in the morning, New York time. Price trades back down at the open right inside of this entire 15-minute block, right in here. Look at your charts and you'll see we traded this low below this swing low here. What was residing right below that low? Sell side liquidity. Sell stops. Anyone that bought here, they've been waiting for that bull flag to unfold. No, sorry, you don't get a chance to run this. They take you out. Retail's no longer part of the run. They run it here quietly and slowly. One little pop up here. I did not want to buy that. I wanted to see the gap inside this candle fill. This candle's high here, and this up close candle, all this buy side, I want to see it rebalanced. That's what I'm buying on a down close candle right here. It's coming right back down and closing in the high from the open here. All this buy side, it rebalanced it. I used a market order. The spread puts me in here. Price rallies up here, and you saw my limit order get filled on the recording I did and shared on Twitter. This is all the time and sales data. You can see it's still the same account up here. This is what the public's seen on Twitter today. They saw me do this, and believe me, you saw their reactions. They're flabbergasted by the fact that I'm catching these moves. They only see this because I did 10, 20, and 30 pip move or sweep above these equal highs. That's what I'm giving the public. That's free tutorial level. Okay, there's nothing wrong with me doing that. That's not mentorship. Okay, now let's take a closer look at mentorship level. Here's that same chart I gave you leading up to this week's analysis. Well, last week's video for this week's analysis. I said we want to be looking at dollar CAD, and these are the levels I think that they're going to reach up into. Look at the low end of this range right here, right in there. Okay, I'm going to teach this to you. I'm not teaching it to you in this video, but I'm going to be teaching you this in here for institutional order flow drills and for entries and such, how to key off of specific levels and using targeting. But for this video, I just want to give you this. You can see my entries here and my exits right at the bottom of that range. That's not random. It's the reason why it's there. I gave you this chart last week. Look at the video. If you download my videos, you'll see that it's there. It can't be altered. It can't be added later on. It's the same video. We were looking for a bullishness on dollar CAD anyway. The market structure implied that we could have seen a retracement into that hourly order block, but if we don't get it, what do we wait for? That's what I shared on Twitter. What I outlined, and this is proof that I could put this stuff on the front page of the USA Today newspaper, and everyone, majority, would just ignore it and not even care. I outlined why we could still be buying the dollar CAD based on that gap theory. We don't wait for a deeper retracement. If the gap is indicating we gapped lower on Sunday and we traded back above the gap, that's extremely bullish. You don't wait for that hourly order block that we were outlining. That was just one opportunity. The plan A is buying dollar CAD. That's the plan. Okay, so it's important that we distinguish what's the focal point and what are other opportunities that go in line with that same underlying premise. Remember, I'm your spotter. It's your job to pull the trigger. I'm not telling you to aim up north when the target's down south. Or I'm not telling you to look to the left when the target is on the right. I'm pointing where your focus should be. Then you use the tools relative to the content level you're at in the mentorship and study. You're not always going to see it, especially if you're 1 and 2 and 3 months in. As you get deeper in, especially at month 5 and past, you will know certain things based on what the lessons have given you. But it's in your charts right here. I told you what was happening. This is what you get when you understand what the daily chart is telling you. It gives you the underlying narrative. Where is it reaching for? Okay, so if I am standing on, think of us on a baseball diamond, okay? And I am the pitcher. I'm pitching the ball. Each one of you have a position on the field with me. You're on my team, okay? If I'm controlling price as the pitcher, that baseball represents price. If we're down here on Sunday, and I said I ultimately want to throw that ball up to here minimum, and then to this level here, and then here, and then here, I may not get that efficiently done by just throwing it single, one-handed with all my strength. But I can throw that ball to the second baseman, then to center field. You get what I'm saying? So if I'm controlling price and I want to throw it up here, I'm going to do it in 1, 2, 3 candles, or it could have been 1, 2 candles. But why the big candle today? The economic calendar. All the volatility came off of the heels of that bank rate announcement. So we were bullish going into the week. Yes, we were looking for something down here. We could have, went off of a long one relative to the hourly chart. But the gap on Sunday is what drew all the focus on. It didn't need to go lower. So no, retail was not right it was not right on this. Okay. We were right. We were looking for bullishness on dollar CAD. We were bullish on dollar. All that is enough. That's plan A. That's plan A. Higher dollar, all the pairs, dollar CAD, dollar yen, dollar Swissy, should find ease, okay, or low resistance when it rallies. And that's all we're talking about here. That's the focus point of all of my weekly commentary. I'm telling you where the market's going every single week. It's your job to practice and study inside of that. And if I give you insights on Twitter, believe me, it's meant for your learning. It's all part of this whole process. And the free members that are reading that, they have no idea. They have no idea what I'm talking about. They think they do, but they don't. They don't know. Because remember, they only seen this on Twitter. 10, 20, and 30 pip grades above a high. That's all they saw. And that's enough. That is enough. That blows away 98% of, well, it's 100%. I'll just be honest. It blows away 100% of everybody else's educational material because it gives you exactly what you need, what you're looking for the setup, where it should go, so it's underlying premise or bias, and where's your targets. It's it. It's done. You got a complete system. But mentorship level, the objective was well beyond this. We're way up here, and we still got a little bit more to get up there. Think. That's plan A. Institutional order flow all this week. Bullish. I outlined everything for you here, and I told you before it was going to happen where it should go. The only curveball I gave you was the economic calendar. You knew about dollar CAD, but I did not include it in the economic calendar. How many of you, give me a number 1 on Twitter, and I'll know what that means, but nobody else will know. Give me a number 1 if you check the economic calendar. If you didn't do it, be honest. Tell me. Just give me a number 2. And that'll give me feedback that I'm looking for, because I'm going to test you in ways that are interesting like this, that helps you learn. You're going to look at this, well, why don't you just come right out and tell me, Michael, this isn't fair. No. You're going to learn. You're going to learn from this because it's meaningful. It's impactful. If I tell you all the answers and I draw up the charts and do everything for you, you're paying me $150 to give you analysis and setups and signals then, and that's not what this is. I point, you shoot. Until next time, wish good luck and good trading.